Elon Musk's SpaceX AI merger is targeting what could be the largest IPO in history, up to $2 trillion. The combined company is already valued at $1.25 trillion post-merger. But what would Benjamin Graham, author of The Intelligent Investor, say? Would he see this as a sound investment or dangerous speculation? In February 2026, SpaceX acquired xAI in a deal valuing SpaceX at roughly $1 trillion and xAI at $250 billion. The goal? Build space-based AI data centers. In 2025, the company generated $18.7 billion in revenue, up 33% year-over-year, largely thanks to Starlink's $11.4 billion contribution and over 10 million subscribers. Starlink is solidly profitable. However, the AI division, xAI, lost $6.4 billion on just $3.2 billion revenue in 2025. The overall company posted a $4.9 billion net loss for the year, with another $4.3 billion loss in Q1 2026 alone. At a potential 1.75 to 2 trillion valuation, investors are paying an enormous multiple, over 100 times 2025 revenue. In The Intelligent Investor, Graham introduces the central concept of margin of safety. He writes that an investment must promise safety of principal and an adequate return upon thorough analysis. Graham would likely ask,
where's the margin of safety here?
Buying at these prices assumes flawless execution for years, dominating AI, successful orbital data centers, and turning massive losses into huge profits. As Graham warned,
a sufficiently low price can turn a mediocre business into a sound investment, but paying too much turns even an excellent business into a speculation.
Graham was deeply skeptical of IPOs. In his book, he advised, all investors should be wary of new issues. Most new issues are sold under favorable market conditions, which means favorable for the seller and less favorable for the buyer. He called IPOs a time when companies and bankers strike when enthusiasm is highest. For SpaceX xAI, Graham would almost certainly recommend waiting after the IPO. Get several quarters of real public financials, let the initial hype fade, and look for a better price when Mr. Market turns pessimistic. The execution risks here are unmatched. xAI is locked in a brutal capital war against OpenAI, Google, and Anthropic, while burning nearly $1 billion a month. Meanwhile, Starlink is facing its first real pricing pressures as it expands into lower-income global markets, alongside brewing low Earth orbit competition from Amazon's LEO project and AST SpaceMobile. So, what would the intelligent investor conclude? SpaceX xAI is an ambitious company with extraordinary vision, but at current valuations and with heavy losses, it fails Graham's strict tests from chapters 1 and 20. It may suit aggressive speculators who believe in the vision, but for defensive value investors, Graham would likely say, too speculative right now. What do you think? Buy at IPO or wait? Comment below. Like and subscribe for more value investing takes on today's hottest companies. I will see you in the next one.